Hey everybody, good afternoon. This is John here at Trendy Trading. Let's go ahead and take a look at broad market analysis. I'm going to be looking at the SPY, the Qs, DIA, IWM. We'll go over the skew, look at also the VIX, maybe some silver and gold, and then kind of wrap things up. The first charts we'll be looking at are on Thinkorswim. And then I'm going to show you a bigger picture on TradingView once we go through these charts, okay? All right, so let's get started. So SPY, a couple things I want to talk about really quickly. This is a weekly chart here on your left-hand side and a daily on your right. Notice that we broke down below the cloud. Again, I've shown you over time that the last time we broke down and stayed under was back in this period of February of 2020, okay? And anytime we're underneath there, you can see it's not very fun until we can start finding some sort of demand down and to the left. And that's what we're looking for right now. Basically, is price discovery. And if you notice, this is an H formation on a weekly time frame. You could see that last week we came into the trendy edge or the monthly edge, which is your pink line. And if you look to the right, you can see what that level is at $416 and a penny. Notice this did hold last week. We did sell off into Friday. You can see that over here on the day chart. Um, and so for me, that's your, that's going to be our mark. Do we take out this pivot low? Do we take out the trendy edge? And if we do, I went ahead and placed the level here at 415.17. Now understand, if you wanted to get aggressive, instead of going short under 415, we could be looking at going short underneath the trendy edge. But I just want to see if this pivot low is going to hold, or maybe it's going to be this pivot low. Either way, we have both targets here that are lined up with those levels. Okay. Give me 1 second here so I can show you that right here. So we have this pivot low, all right, and this target. We have this pivot low, which is going to be basically that line in the sand for us to go short. Just like I've always taught, if you're looking at going short, if for some reason we get a capitulation event or we open up really down, I don't really want to be looking at trying to take a short there. We want to look to take shorts when the market pops back up into resistance. All right, so this is a down market. The trend is down, and in most cases, the better place to buy your puts is up here in the cloud. So you can see here on the daily chart, we came into the trendy edge, we gapped up, right? And this was very difficult for traders. I got to speak to plenty of people last week who were long or short, and both got hurt. In many different cases, you're going short here, you wake up the next day and see this, and then you're covering, right? And you're finished. You're like, man, I can't do this. I think I'm going to go long. And then lo and behold, guess what? We break down again. So these levels, these trendy levels are here, right, for a visual. These are going to be your support levels, and the cloud, which is also part of your script, is going to be that resistance. And basically, this is what we are lining up to almost every single week. We wake up in the mornings, and on these gap up days or these big push up, just notice that every time we do that, we're coming right into resistance. And a lot of times it's a sell the event in the morning. Okay. SPY, as far as like your candle formations, you can see here we have an inside and down. We fell underneath the decelerator, so this is what we call reverse ACDC. So I just want to point that out. Once we broke below, you're looking to go short into the ME, and that worked. And at the end of the day, you just don't want price to break back up above that decelerator. All right. Some other things that we could look at here is maybe possibly go into pattern recognition, right? So come over here on your daily chart and get an idea of what is common nowadays. Remember, like count the down days, right? 1, 2, 3, 4, and then up. Okay. 1, 2, and then up. 4. Okay. And then we look here for more pattern recognition. 1, 2, 3, 4, 5, but then we go up. Okay. So 4 seems to be pretty normal pattern recognition for right now. Okay. So here, 1, this is down, 2, 3, 4, and then up 2. And I keep making jokes out there saying that, this market itself, the bull rallies last about 5 minutes, but in reality, they're lasting about 2 days. Okay, about maybe 2 days. All right, and you can see that 2 days here as well. 2 days, and that's not really even 2 days, folks. All right, so just something to take note of. This is one red candle, and if patterns were to continue here for some reason, we break down, you could see 4 days, right? And then we'll be looking at buying that dip to the upside. All right. Now, how low can we go? Right? How low can you go? Um, in this case, I want to look down and to the left. I want to look at trendy signals. You see, from a long time ago, I had this 380.26. We have a buy signal there. But down and to the left, you always want to see, like, where did this pivot low come into? If you come over here, you're going to see that it came into the green arrow. So these are great for indicators for potential buys in the future. So this green arrow down here, if we get a capitulation of it for some reason, this is way down here around 380.26. You could see a bounce around 394 to 400. It's a psychological round number that you'd be looking for. Okay. All right. So that's the SPYs. These are your levels. I'm not going to really go over the levels because you have the charts right here in the room. But you know how we trade the neutral strategy. It's also out there on Twitter if you want to watch that. Okay. Sorry, not Twitter. I meant YouTube. So you could go out to YouTube and watch that if you like. If for some reason you've forgotten how I trade the neutral strategy. Okay. All right, so that's SPY. Overall, we are in a downtrend. Again, look for from your 4-hour, 30-minute, any of those. If we're underneath the cloud, guys, be careful. It's sideways to down until proven otherwise, until we can get back over these clouds. And you can see even on the weekly, we cannot get over the cloud. Even on the daily, cannot get over the cloud. All right. All right, so I probably won't go over DIA and IWM. There's really no reason to. It's the same thing that's going on with all four of these charts. But I do want to go over the Qs because the SPY and the Qs are really the most traded, I think, here in the room. And you can see momentum, green to white to red, never a good thing. If we go back and look at history, green to white to red. Well, this one's interesting, green to white to red, and then started to push up here. But in most cases, once we go red, things start to get a little ugly. All right. So let's ask ourselves here on the Qs. All right. On the NASDAQ, what are you seeing here? I see an inside and up, but the first time that it was tested was actually this guy. And it worked really well for that week. That was a really nice strong hammer that came out of that week. But what's happening now is what I call price discovery inside a zone that we've already tested. And this is a big deal because if we run out of buyers here and we take out this pivot low, then we're just going to dig deeper into the next inside and up. And in this case, folks, we basically we dropped from the upper edge. Notice that the mid became resistance, and now, I mean, the target right now has to be this lower YE coupled with the previous lower YE yearly edge. Okay, so again, inside and up formation. You can see how well this edge worked last year, and this year I'd love to see that work. I'd love for this to be a comeback story because obviously I'm a bull. I'm still keeping some optimism here. Like I said, I don't want to be negative and create a lot of negativity around the market. I think that it's easier just to say, hey, we're in a downtrend and we're looking for levels for price to come down into. Okay. So in this case, again, we will look at the inside and ups, the trendy edges. We'll be looking for support here. I do feel like with the skew, and everything that I'm seeing is that we should be getting close to some sort of, resolution, some sort of bounce that, in my opinion, will last several days and not just 2 days. Something that will basically, blow the socks off. And the bears are going to be, what you don't want to happen is when it does happen, that you don't trust it. But it's easy to find yourself in that position, because they are creating bears out of us, right? And then when this market decides to turn around for at least several days, I'm not saying that it has to go to all-time highs. I'm not saying that we turn around and never look back down. What I'm saying is don't let the opportunity pass you by because you're still stuck on, this thing that, oh, we have to go down. All right. In my opinion, we've been going down for quite some time. And, last year wasn't easy either. And I'm going to get a little off subject here, but I just need everybody to understand last year wasn't easy either. And neither is this year. So anybody that tries to tell you, last year was easy, that's not true. Just because the market pushed up, if you guys remember, there were many, many signs that the market was overextended, that, the skew was basically saying there was going to be a sell-off. And guess what? The sell-off just like never came. So people had a hard time. I especially had a hard time. So, don't be discouraged. Just know that we need to seize the opportunity when we see it. And I personally feel like opportunity is around the corner. Opportunity also takes shorts, okay? So don't get that twisted. We could take opportunity for the upside and downside, but we are starting to look a bit extended here to the downside on the weekly. If for some reason we push really hard down into this blue line, this trendy edge and this inside and up, I'm interested there. I'm going to start getting interested. But I need to also be very smart and understand that, when you're looking at the pattern recognition, it's very, the bounces are very small and they don't last very long. So you just got to be smart. It doesn't mean we can't go long. It just means it may only last until we hit that cloud again. That's all. Okay. So, less trades, less trades. So I wanted to ask the question out there, and of course I only got, this is kind of a normal thing I think in a service, and I've noticed this in services I've been in, and especially even here at Trendy Trading. I would like it to be a little bit different and not so skewed, but when I ask a question, it'd be nice if we could get every single member to answer, but we know that's not going to happen. But from what I can see is most people are just kind of intraday trading, and or just kind of waiting. All right. So myself, I should probably be doing less trading in some of these cases, but I'm doing me, and I'll continue to do me, and continue to trade what I see here. All right. All right. So like I said, I went off subject a little bit. I apologize for that. But on the Qs, same thing as the SPY. I think we're getting down here into an area where we could be seeing a bounce. It's just a question of whether or not the bounce is going to last very long. Okay. But I love this. We have edges right here. We have inside and up. And just so you know, this inside and up, it's this wide. All right. So that does take into account both trendy edges. So if you're on the bear side of things, and if we got a capitulation, I mean 310 down to 300, and that might be a nice debit spread on the Qs for a hedge. I say a hedge or just a trade. All right. Where do you not want to be short on the Qs? In my opinion, it's far away. I mean, we either need to get back above the cloud. All right. I wouldn't want to be short above there, but also, if we were to take Fibonacci's and place them, let's just say that we get down to this trendy edge, okay? You could see here, like we're in a bear channel until price can break over this 38.2. But it's very interesting because if you notice, even if price starts to pick up from here, you're still coming right into the cloud. So it's just not going to be an easy trade unless we get some sort of catalyst where we blow through the clouds. And I mean, it's just a huge bull candle that just blows everybody away. So, will that come? I don't know, but it's going to take a lot for that to happen. Right now, everything I'm showing you, SPY, Qs, DIA, IWM, basically my sentiment is sideways to down, okay, longer term, unless we get over the cloud. Just for education purposes, really quickly, if for some reason you're confused and you only like to trade to the upside, That's okay. Just go to a smaller time frame. Let me show you here on the right hand side, just really quick. We could put ourselves into a 30-minute candle, okay? And you can see right here, if I were to trade to the upside, right, I wouldn't want to get long unless we could get above this cloud. So for me, that would be somewhere up here towards 328, 329. All right. Now we can go smaller than that. I show you guys on 5-minute candles and so forth of what we can do. All right. And we'll put this back on a daily, just like that. All right, there we go. All right, so overall, again, Qs, sideways to down, SPY, sideways to down until we can start to break above. I am bullish short term if we can come down into our levels and find buyers there. Short term in this case, because of pattern recognition, maybe a day to 2 days. Okay. Just really quick, I want to look at IWM, not DIA. And the reason why I say that is because I did not change the blueprint once again for, let's see, 3 weeks now, which is pretty impressive. If you notice, the levels have worked really well. But not only that, it's just neutral. It's sideways. And this is interesting to me, folks. Like, so what's happening here, if you haven't noticed, is that we are sitting at the lower trendy edge. And the question is, are the SPY and the Qs trying to get there as well? You know, but he's like hanging out. He's like, you know, I feel like, I sound a little crazy, right? Because I'm talking as if, you know, it has a mind. But it's just hanging out here. And he's like, you know, I'm going to sit down here and just kind of create a base around the trendy edge until you guys catch up with me. And then maybe from there, we can all, you know, there's a resolution in Russia or whatever. Oil starts, you know, coming down. People start feeling better. We're going into spring break and summer, and everybody wants to travel. And, you know, things pick back up. And we go back and we look and we go, holy cow, man. That's all that was happening. We were just building out for that move up. Now that's the positive in me. Okay, that's the bull side of me. The bear side is saying, hey, this is still a H formation. Regardless, we're still lower on the curve. While I'm showing you this, notice just like the Qs I was just showing, look how if you just took these two boxes and, sorry, two lines, and then you made a box around that, that's exactly where we found buyers. Okay, that's how you use those trendy edges. So anyways, it just feels like it's hanging out here and waiting for the other two. They don't have to come into the edges, folks, but I just want to point this out that it is very confluent. It's very interesting, and I'd love to see that play out, but I'm not, you know, exactly sure if that's going to happen or not. Okay. All right, so let's go to, I'm going to go into trading view. Okay. I'm going to bring this over here. And let's go ahead and, sorry, I'm using my smaller account. I've been using my smaller account, which is the risky account, more often. They're both Thinkorswim, but I just want to point that out just so everybody kind of knows what's going on with my accounts or whatever. But you know, with both accounts, one is a margin account and the other one's a cash account. So the risky account is my cash account. All right. All right. So here on, you know, here's the bigger picture, right? What do we have here? Let's pull up the SPY really quick. I put some of these charts out there for you guys. I hope this helps. I just want to annotate a few things. I wanted you to see what it looked like when we broke down before. I love Thinkorswim, or sorry, TradingView, because I'm able to see a lot more data on one screen without it getting bunched up. Love that. But you can see here, close under the cloud, and this is what, you know, happened. The SPY yearly mid will serve as this week's line in the sand, roughly $422. So this dotted line here, we have quite a ways to go down if the SPY was going to test the bottom of the lower yearly edge. So unlike the IWM, just saying IWM's already sitting there, this would have to come all the way down to 380, and current price is sitting at 420. So about 40 more dollars or 400 points in the ES. Okay. All right. So the next thing is, as long as the weekly stays below the cloud, think chop to lower long term. All right. So I just want to be really careful with this statement because, again, we don't know if there's a catalyst that could come up and all of a sudden this edge holds, and one weekend looks like this. You're still like, well, I don't really trust it. He's still saying we're underneath the cloud. The second week does something like this and you miss out on a huge rally. Again, we will be focused, I will be focused on not falling into that deer in the headlights, and I do that by giving these updates daily in the morning. So I think we'll catch on very quickly and do the right thing. So just know that. All right. The next thing is that, I said a break of previous pivot low, 410.68, could bring 405 to 390. And all I'm doing is just kind of pulling these targets into play here. You can also go over to the BMA and just look at that chart as well. This is just a bigger picture, and you could lead all the way down here into the lower YE, just so everybody understands that. Right. Let's go ahead and look at the Qs just really quick. All right, so here's the Qs, and I just want to show you real quick for education purposes. The last close was underneath the cloud. This is what it looked like. Okay. This is an inside and up right here. I just want to show you that when price left and they ran out of buyers, price then resorted back to that inside and up. And this is what we like to see on those inside and ups. We like to see that type of move. Okay. And that inside and up again is right there. Price came into it and then pushed up. All right. All right. The next thing is that the green box that we are currently in right now, this is two inside and ups. And what I did is I combined them. What I want to point out is that the first time we came into the inside and up, if you go across here, you can learn a lot by just kind of following across. We came into the wick. All right. The second time right here, we came into the formation itself. Okay. Third time, we're in the formation. And if for some reason we take out that low, guess what? I believe we're headed back, or sorry, we're headed to the next inside and up, which happens to be confluent with your trendy lower edge, yearly edge. All right. So QQQ. And that level is coming in at 310.02. All right. Let's go over here and look at DIA. Inside and up, same thing. You can see it's coming in again, pivot lows. If for some reason that breaks that pivot low, you could see the Dow Jones come in at around 306. And then IWM, again, this one's different. It's hanging out at the lower edge. If for some reason these pivot lows break, then you could see price come into the gap fill down here where it says gap fill at 163. All right. So that's what we're looking at there. Just really quick, I'll show you gold. This was the blueprint that I gave you guys. I told you once we broke over the 618, you had an 85% probability of hitting the 88.7. That was 190.12. It did that. It came up very close to this pivot high, probably about close to about 90% of it, and just kind of came back. And as long as price holds the 618, I would expect it to kind of flag here. And if the market, there's more turmoil or, fear in the market, then sure, we could flag here and then break out again. If not, I think it comes all the way back down to 175 to 180. All right. That's what I'm looking for in gold. Let's look at silver just really quick. All right, here's silver. When I was in the position, I was looking for a bigger move, potentially up to here, but that didn't happen. So we made 40 or 50% in it, which really was not bad. And that was fun, but it looks just like gold and it's kind of just flagging here, and it could potentially break out into the inside and down at some point. Again, like I said, if more fear comes into the market, you could see people looking for gold and silver, but I do think that we're getting close to resistance here on silver. Okay, for now. Real quick as well, just for fun, let's go ahead and look at XLE or energy. We got into the red box. This was the area I'd been talking about in the room for plenty of months. Looking back, I said in hindsight, I should have just kept my XLE trade that I started with. I think at the beginning of the year, we had bought out like 60 or 70 days, something really far. It might have been 180. That would have paid huge, and you could see that would have been really nice as well. But a lot of you did really well just following the blueprint here, and you could see all the levels held. We hit the red box. The question is, do we just kind of flag in here, right? And if we do, it's going to look like gold and silver in my opinion. And if for some reason we come to some sort of resolution, I think these things could fade a little bit, and they need to digest. And price could drop back down towards 70 and 65, and that's XLE. Let's go ahead and look at the ES futures. Matter of fact, they just opened up, and let's see what they're doing. All right, so they're up a whole 13 points. Not very much, but that's okay. It's not like this huge deep red, so that's not bad. But this is your ES futures, the same blueprint. Matter of fact, we're going to change it up a little bit and do this together right now. These are my expected ranges. I'm going to take some of this and I'm going to use the trendy edge right there, which is the lower one. Okay, we don't need that in there. You guys should know what that looks like. And we're going to say our expected range would be that edge, okay? And then I want to find some fibs here and figure out where we are. So we have this nice big down weak candle, and let's go with a daily, just really quick. There we go. And we're going to use this one, find that edge right there, and that's going to be our expected range. Let's go back to weekly, and it's going to be these two lines. Okay, just like that. This support, we're just going to move this down, okay, to the low, just like that. All right, expected range for right now. So tonight, if we continue to push up for some reason, like we've been doing at night, just pay attention to your 4H cloud, okay? And I'll probably put that in the room here shortly. And while we're doing that, let's go into futures. And let's see, 313.22. There. All right, so that's ES futures. Let's look at oil, see what they're doing really quick. All right, let's open that up, and down about 76.83 cents. This is important. If we do the weekly, I think we've already actually, what I did is I took this big breakout candle and I took this pivot high. So this range right in here, you're sitting right at the 618. If it breaks down, I think that you head down towards $98, folks. Okay. So again, that trigger is gonna be under 108.15. Oil's been very difficult. The liquidity in it, just be careful if you're trading futures with oil. I prefer the options right now. They're just easier because I kept getting stopped out when I was just trying to take trades, which is really frustrating because it goes in your way. But with oil, you got to be really careful. I mean, 50 cents is $500 of risk for every contract. $1 is $1,000. So again, the delta is it's up there. You just got to be careful. All right. So again, I like options. I would love to see this fade as we get closer into summer here. We had a build up into spring break, and I think we could see down here towards 98. Okay. That's oil futures. Let's go ahead and look at NQ just really quick, the NASDAQ, and kind of see where we are. All right, and there's NASDAQ kind of bouncing off the trendy edge again. Um, I want to put the support down here at this pivot low. Okay, and then resistance, we're going to do the same thing. Actually going to use, just going to go like this. And I want to find a resistance. I'm going to say the 618. And then I'm going to check that with 4-hour really quick and see if that line is, yeah, it's right there around the clouds. That's perfect. Oh, and it just happens to be an inside and down. Pretty cool, right? So we're going to go back over here. And that's what I'm going to look for right there. So really, look how wide these are. So basically I'm just neutral in there. I don't really want to do anything unless you're on a smaller time frame. So oh, stay in Q. Good. All right. So overall sentiment this week, again, I feel like the skew and everything that we looked at is telling us that we could get a potential bounce here. There's a lot of fear. The fear and greed is at 14. I mean, it only goes to 0, guys. It's pretty low. Um, there are some signs that we could still push down, just like last week. There's a lot of signs that show that we could still push down. And I'd be watching the VIX. We'll have a better update in the morning for, intraday situation. But my broad market view is this: we continue to stay under the clouds. We do have quite a bit of divergence where we can make some money to the upside. Let's just look for the subtle hints on smaller time frames and try to get on the right side. And just remember, if the volatility is high, just think, smaller with wider stops, and if we get the direction right, things will work out for us. This week, let's, do very well. Let's be there for each other. It's a hard time, I think, for a lot of people. And just know that you're in a community that really cares about you. I definitely care about you. And if there's anything you need, please reach out to me. We'll see you guys soon.